Good morning, you're watching News 9. I'm Karthik Malhotra, and thank God it's Friday, isn't it? Well, another Friday, another day of the week, another week. And there's another decision on Trump's tariffs. That's right, Donald Trump has hit the pause button on tariffs on Mexico and Canada. Now, that is something that we will get deep into on the show today. But that's not all. It's Friday. It's been a choppy week for the Indian stock markets as well. We will bring you the mood check on the Indian indices as they open at 9:15. But more importantly, how should you read the mood of the market and what this means for your investments? Amit Kumar Gupta will be with us to discuss. You're watching Morning Brief at 9 right here on News 9. This is Morning Brief at 9. First up, let's look at the headlines in news today. In another turn of events, US President Donald Trump defers tariffs on Canada and Mexico. Tariffs to now kick in on April 2nd. Wall Street is jittery over economic uncertainty in the wake of tariffs. S&P 500 down 1.8%. Nasdaq tumbles 2.6%. IT Minister Ashwini Vaishnav announces AI compute portal. Sharing of 14,000 government-procured GPUs at 67 rupees per hour. South Korean car maker Hyundai trails behind Mahindra & Mahindra and Tata Motors in the month of February. Maruti Suzuki still 3 times more in car sales than Hyundai. This is as per the latest data by FADA. Even as S.N. Subramanian's 90-hour work week debate continues, L&T now announces a one-day paid menstrual leave for women. A 4,000 square feet showroom at a rent of 35 lakh rupees a month, but Tesla won't have it easy in India, says rival SAJJAN JINDAL. And as tensions have statedly thawed between India and China, daily flights between the two countries likely to take off from May this year. After Amazon and Walmart own Flipkart, now quick commerce companies Swiggy, Instamart, Blinkit and Zepto face antitrust case on discounts they offer. A nudge by the Central Bureau of Direct Tax (CBDT) and 30,000 taxpayers declared over 30,000 crore rupees of foreign assets and income. US President Donald Trump has pushed a pause on the 25% tariff he slapped on most goods from Canada and Mexico. Now, the exemption applies to products covered under the North American Trade Pact. Trump says tariff exceptions will remain in place until April 2nd, after which he has warned of enforcing a global system of reciprocal tariffs on all U.S. trading partners. More details in this report.
One for Canada, one for Mexico.
Yes, sir.
U.S. President Donald Trump on Thursday delayed for nearly 1 month his 25% tariffs on a wide range of goods from both Canada and Mexico. The latest twist in this fast-shifting trade policy. The exemption covers Canadian and Mexican goods under the North American Trade Pact. It comes just 2 days after Trump imposed sweeping tariffs on goods from the country's 2 largest trading partners, which has rattled financial markets and business leaders, who warned the move would hurt American consumers.
Después de hablar con la presidenta de México, Claudia Sheinbaum.
At a press conference, Mexican President Claudia Sheinbaum read aloud Trump's Truth Social post announcing the 1-month reprieve. She said the decision followed a, quote, respectful phone call with Trump, during which she explained that Mexico's security measures have been working to reduce the flow of fentanyl into the U.S.
Solamente en febrero,
In February alone, the reduction in fentanyl seizures on the U.S. side of the border with Mexico was reduced by 41.5%.
entonces le dije, estamos teniendo resultados.
So I said to him, "We are getting results, President Trump. Now that you put in the tariffs, how are we going to continue collaborating with something that hurts the people of Mexico?"
April 2nd is going to be a very big day for America.
Trump said the tariff exemptions will last until April 2nd, when he has threatened to impose a global regime of reciprocal tariffs on all U.S. trading partners. The latest development comes a day after Trump exempted automotive goods from the 25% tariffs on imports from Canada and Mexico. Economists said those levies threaten to stoke inflation and stall growth across all three economies.
Graphics processing units or GPUs will be available on the India AI compute portal for as low as 67 rupees an hour, and that's what Union IT Minister Ashwini Vaishnav announced yesterday. On the first anniversary of India AI mission, the minister launched an array of initiatives including the India AI compute portal and dataset platform AI Kosh, intended at democratizing access to AI and driving innovation in the country forward. The India AI compute portal will provide access to compute more than 18,000 GPUs, cloud storage and other AI services to students, startups, researchers, academia and government departments, as per the minister. The minister also said that India's own foundational model is progressing exceedingly well with 67 applications for creating foundational models. 22 of those are likely to be the large language models to be developed in India. The minister also said that in the coming 3 to 4 years, India should have its own GPUs competing with the world and take a seat among the top 5 tech nations of the world. Now, GPUs available on the platform include quite a few of them, and here's a list: the AMD 300X, the AMD 325X, then there's also the NVIDIA pack with the NVIDIA H200, followed by the NVIDIA H100, AWS Titanium and Infernicia, and NVIDIA's GeForce, among others. Now remember, in March last year, the cabinet had approved the India AI mission with a budget outlay of over 10,000 crore rupees. It attempts to establish a comprehensive ecosystem catalyzing AI innovation through public-private partnerships. US EV maker and Elon Musk-led Tesla is driving into India. Yeah, I know that's old news, but remember, Tesla is opening its first ever showroom in Mumbai's BKC next to Apple's flagship India store at a rent of 35 lakh rupees a month. But what is new news is that chairman of JSW Group, SAJJAN JINDAL, says it won't be easy for Tesla. At an event, JINDAL said Indian EV makers like Tata Motors and Mahindra are well ahead in the EV race. Remember, SAJJAN JINDAL's JSW Group owns the SAIC JW with a joint venture with a 51% ownership, which is the parent brand of MG Motors, which also competes or will compete with Tesla in the EV market. Now, Tesla's own dwindling dominance in the global EV market across US, China and now even Europe, and competition in the Indian market from domestic players could make the ride in India bumpy. Tesla will have to understand the Indian market and power up India-specific models and also invest in charging infrastructure if it wants to make a dent here in India. Add to that the government's requirement of making manufacturing investments in India, Tesla could be looking at a complete overhaul of its strategy. But India's own tariffs on duty and the chances of that changing given Trump's retaliatory tariff threats could change the dynamics of the auto sector. Now, would they favor in change of Tesla? That is something that we will have to wait and watch for. But some experts believe that India can't change its duty structure on foreign cars, and that would crowd out domestic manufacturers, and the benefits would not accrue as much to Tesla as they would to Japanese car makers. And L&T has taken a big step after being criticized over the 90-hour work week statement by its chairman S.N. Subramanian. The company has now announced a one-day menstrual leave for women employees, With 9% of L&T's 60,000 workforce being women, this makes L&T among the first in its industry to implement such a policy. The step is being viewed as a progressive move, as this policy will help foster a supportive work environment, also acknowledging the importance of health needs for women in work environments. This policy is likely to benefit almost 5,000 women working in L&T, reinforcing the company's commitment to gender-friendly policy, keeping in mind that L&T is into engineering and construction. This move will be more viewed by Indian companies in this sector and could follow suit as well. Or will L&T be the only company of the sector to be able to do this? Well, that's something we will have to see how competition reacts. But for now, just ahead of Women's Day, that's the news coming in from L&T. India and China are in advanced discussions to restart direct commercial flights from the month of May this year, ahead of the Kailash Mansarovar Yatra this summer, according to government officials. The move follows an agreement between the two countries in January to resume air travel and the pilgrimage after a gap of 5 years. According to officials, approvals for flights from Delhi, Lucknow and Kolkata to Lhasa are expected by the end of March. Talks are ongoing with airlines including Indigo, Air India and Tibet Airlines to finalize the routes. Now, beyond pilgrimage routes, both sides are also considering resuming flights to major Chinese cities like Beijing and the manufacturing capital Guangzhou, in addition to Shanghai, Chengdu and Kunming later this year. The decision to restore air connectivity follows a thaw in ties after disengagement efforts in eastern Ladakh. India and China had over 500 direct flights per month before the COVID-19 pandemic halted operations in early 2020. Now, flights between the two countries were previously dominated by Chinese carriers such as Air China, China Eastern and China Southern. Indian airlines like Indigo and Air India also operated direct routes. Meanwhile, the resumption of the Kailash Mansarovar Yatra is expected to boost travel. The pilgrimage, which was halted in 2020 due to COVID-19 and border tensions between India and China, is set to return with peak travel expected between May and October. In a new development, over 30,000 taxpayers in India have revised or filed belated income tax returns, declaring additional foreign assets and income worth more than 30,000 crore rupees, according to government sources. This comes after the CBDT, or the Central Board of Direct Taxes, launched an awareness campaign last November urging taxpayers to disclose high-value foreign assets or income. SMSs and emails were sent out to nearly 20,000 individuals with major foreign holdings, prompting many to review and update their tax filing. Now, sources reveal that nearly 25,000 taxpayers reassessed their returns, while over 5,400 filed belated returns for the assessment year 2024-25. This resulted in the declaration of foreign assets worth 29,208 crore rupees and additional foreign income exceeding 1,089 crore rupees. Additionally, more than 6,700 taxpayers updated their residential status from resident to non-resident. With nearly 62,000 of nudged taxpayers responding positively to the trend of voluntary disclosures, these have grown majorly from about 60,000 in the assessment year 2021-22 to over 2.3 lakh taxpayers in the assessment year 2024-25. And India's fast-growing quick commerce sector, led by the likes of Blinkit, Swiggy, Instamart and Zepto, is now under the scanner as a key FMCG distributor's body has filed an antitrust petition with the Competition Commission of India. The All India Consumer Products Distributors Federation has alleged that these platforms are engaging in predatory pricing and deep discounting, posing a serious threat to traditional retailers and distributors. The petition claims that quick commerce firms backed by venture capital and foreign direct investments are deliberately operating at a loss to expand aggressively and dominate the market. Now, many small retailers, unable to match the steep discounts offered by these platforms, are struggling to stay afloat. The Federation argues that if left unchecked, these pricing strategies could lead to monopolistic practices where a few large players control the market, leaving smaller businesses with no viable path to survival. Additionally, AICPDF has raised concerns about major FMCG brands allegedly offering bulk discounts and preferential pricings to quick commerce platforms. The Federation claims this gives them an unfair advantage over traditional distributors, further distorting market competition. Now, with the petition now in front of the Competition Commission of India, all eyes will be on the regulator to see if it launches a probe into the pricing and business practices of quick commerce firms. And moving to the auto sector now, Maruti Suzuki still leads the pack, but long-standing number 2 passenger vehicle maker in India, Hyundai Motor India, has slipped to the 4th position in the domestic market in terms of retail sales in the month of February. This comes as Mahindra & Mahindra and Tata Motors race ahead in the fast lane as per the latest data shared by dealers body FADA. Now, Hyundai Motor India clocked retail sales of just over 38,000 units last month, which is a dip of 20% over last year's February numbers. Maruti Suzuki sold almost 3 times more cars at over 118,000 units in the same month of February. In comes Mahindra & Mahindra on the 2nd spot with sales of close to 40,000 units and Tata Motors at almost 38,700 units last month. The fight between Hyundai and Tata Motors for the 3rd spot is just a few hundred units. Remember, Tata Motors has offered consumers a healthy mix of ICE and EV cars across price points that go from the once best-selling Tata Punch to the Nexon. Mahindra, on the other hand, is adding innovation with EVs again in its slow but likely departure from the once popular diesel engines. Hyundai, on the other hand, has been slow to introduce newer models. Its Creta EV launched at the Bharat Mobility Expo may change the numbers in coming months, but for now, it will have to contend with the number 2 spot. Alright, time to slip into a quick break, but coming up on the other side, a mood check on the Indian markets. Remember, Wall Street had closed in the red yesterday with the Nasdaq down 2.6%. How will be the mood of the Indian market today after a choppy, fairly volatile session that we've seen through the week? We will discuss that and more with Amit Kumar Gupta, the founder of Fintrek Capital, who will be joining us on the show. You're watching Morning Brief at 9.
There were 2 roles that you played, right? One is that of an angel investor. One is that of a good wife.
I told Murthy, you work hard and made money. I worked hard to spend that money.
Mr. Murthy has often talked about your credentials. He said that you are better in all aspects.
You should work and fail, then regret.
I think we are not nurturing and leveraging 50% of our strength, which are the women.
For an educated lady, even today, the problem comes when she becomes a mother.
You are an exceptional combination of a left brain and a right brain, which is very rare.
I'm a positive thinking person.
We all idolize Ma Durga, who is also known as Dashbhuja.
After all, we are a product of the history.
Suppose if you had donned the seat of chairman, maybe by now Oxford or Cambridge would have had chairwoman as a legitimate English word and not a chairman.
Watch Duologue with Barun Das this Women's Day on the 8th of March, featuring Sudha Murthy, only on News9. News9, English news as it should be.
मैं और आप, हम अलग कहाँ हैं?
Gill on 199.
अपनी अपनी मंजिल पर हम दोनों की नजर है और उसके लिए हम जी जान लगाकर मेहनत करते हैं। पर कभी कभी
He's out on 199.
मेहनत और मंजिल के बीच रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी और मेहनत लगेगी, पर शुक्र है आपके पास है टाटा कैपिटल, जो मिटाए फासले आपकी मेहनत और मंजिल के बीच। टाटा कैपिटल, मिटाए फासले।
What does it take to be the greatest in the world? Perseverance, dedication, self-confidence. But there is one thing which truly sets you apart. Your inner strength. Sodium TMT Reebok. True inner strength.
It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense. They have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Welcome back. You're watching Morning Brief at 9. Let's look at the mood check on the Indian stock markets as they opened just a few minutes back at 9:20 a.m. Well, markets at 9:15 opened a little bit in the red, climbed up to be a little in the green, and it seems like it is a choppy but more close to the baseline flattish trading start for the markets. This morning, Nifty 50 just up by 0.07%. It's pretty much flat. Sensex on the other hand is right now down, but remember these numbers could change because we're so close to the baseline of yesterday that every minute and with every tick there is going to be some change in these numbers. But this morning the small cap looking handsomely well at about 0.65% up, trading right now at about 15,500 levels. Volatility is a little lower than yesterday at this time of the day. It's down to about 13.76. Well, remember, it has been a choppy week for the markets, with Monday and Tuesday seeing great shades of the color red, and Wednesday and Thursday seeing some recovery. Let's see how the day ends today. Let's also look at the Nifty 50 heat map and try and make sense of which are the sectors and which are the companies in action today. Well, IT sector seems to be hit, not surprising there, because of what we saw on Nasdaq yesterday as Wall Street numbers came in when markets in the US closed. Nasdaq was down about 2.6%, which is the IT heavy index, and looks like the tariff whiplash on Nasdaq on the IT sector is also casting a negative shadow on Indian stocks today. So the IT sector definitely an underperformer, dragging the markets down. Infi down about 1.3%. This has also been a volatile stock over the last 10-15 days, if not longer, and this seems to be one of the key drivers which is pulling down the market mood today. The banking sector is also in the red. HDFC Bank, ICICI Bank, pretty much the entire banking and financial services pack is looking a little weak this morning. But better news coming in from the auto sector. Maruti Suzuki up about 0.4%. Tata Motors, which has been a stock under a lot of discussion and consideration, is trading at a healthy level, up about 0.7% in early trade. Bajaj Auto is up about 1.16%. Remember, a lot of what is happening in the Indian markets right now is also a factor of what is happening globally, and it's not just the US but the entire US plus emerging markets pack which is driving the sentiment of the Indian investors, both domestic and foreign institutional investors. So let's look at the global markets and see if there is some sort of a correlation we can draw. Like we told you, the Nasdaq was down about 2.6% yesterday. S&P 500 up about down about 1.8% as markets in the US closed. But the Shanghai Composite Index is also flat as India, down to third decimal point. So it's absolutely flat, not worth talking about. Japan is also down this morning. Nikkei is down about 2%, and so is the South Korean Kospi. Well, this is the mood of the global markets. Let us get into a quick discussion now with Amit Kumar Gupta, who joins us this morning. We will try and understand from him of what he makes about the mood of the market. Amit, good morning. Thank you very much for joining us right here on Morning Brief at 9. Let's look at some data for this week. It has been a choppy week. It's been a choppy ride. In fact, for the last many days, many months, ever since we saw the September highs that the markets had hit. But just this week itself, on Monday, there was a flat trading in the markets after last week's catastrophic decline that we saw. On Tuesday, the Nifty 50 fell about 0.2%, again marking the 10th consecutive day of loss. In comes Wednesday, and Wednesday sees a midweek recovery with the IT pack leading the rally, and Nifty was up about 0.6%. In comes Thursday, when the winning streak gains the real momentum. Nifty 50 was up almost a percentage point, and today here we are. It's a flat trading session. What do you make of the mood of the investors at this point, Amit?
Hi, Kartik. Good morning. Thank you for having me. So I believe, after almost 5 months of consecutive negative numbers on the Nifty, the markets were sort of, poised for a bounce back trade. Most of the indices were at a very oversold level. So in short term, I think that kind of a bounce back was expected. But having said that, I think you'll keep on getting these headlines from the trade war, and this trade war sort of threatens to cast a shadow, at least in the near term, of next one quarter. Over the GDP numbers, it may undermine the potential private investment, dampening consumer demand a little bit.
Right.
So my sense is that it would take some time to settle this down. Okay. Obviously, from a risk reward perspective, it's at a good stage, because there could be some sort of a short covering by the FIs at these levels. The dollar index has also gone down from 110 to 104 this morning. So my sense is that there could be some short covering, but from a three month perspective, I think there will be a lot of volatility on both sides.
Amit, I have a few specific questions. I think you have answered briefly, some of them which I intended to ask you anyway. But I think for the sake of clarity for our viewers, let's take these questions one by one. And I want to first give you all the 5 questions, so in case there is an overlap, you could sort of tame your answers accordingly. But I think the biggest question that investors have right now is that, have markets bottomed out, or is the worst yet to come? I think that is one question which most experts find very difficult to answer, but I will throw the ball in your court. Then in addition to that, I think markets and investors want to understand that there's so much talk on small caps and mid caps, and even the regulator last year had said there is froth in that segment. So how risky really are small caps and mid caps right now? Because the swings that we are seeing across the small cap and mid cap segment is absolutely wild. I mean, when they go up, they don't know the ceiling. When they go down, they don't seem to know the bottom. Then I think from a retail investor perspective, there's this question on, what should I do with my SIPs? Should I continue with my SIPs? Should I become more aggressive? Should I hold back? Or is this really the time to pick up some good quality stocks which are available at low prices? And then, of course, we've seen all the volatility in the gold prices, and many investors are wondering, should we just forget about the stock market, go ahead, add more gold, because gold is going nowhere? And finally, I think investors who are here or have been here and want to continue for the long run, they just want to know how long before I see markets climbing back to the September highs. So let's take these one by one, Amit. In your opinion, have markets bottomed out or not yet, and we can see far more levels of crash when it comes to the indices?
All right. I believe, we are in a phase of low earnings growth as far as the companies are concerned. Technically there is a support at 21,750, 800 at the Nifty level. There could be some sort of support there. And depending on how the trade wars unfold over the next 3 months, we can see, some more volatility. So technically, there could be a bounce back, but I think fundamentally it would take another 3-4 months for markets to settle down and sort of form a bottom. Remember, forming a bottom is a process. It does not happen usually overnight. Right. In hindsight, we can say that, X level was the bottom or Y level was the bottom, but, the bottoming process after such a sharp fall, that would take 3-4 months because the technical structure of the market is now sort of broken.
All right. Amit, you mentioned, if I can just interrupt for just a second, Amit, you had mentioned that we don't expect corporate earnings to be great in the fourth quarter as well. But do you think with all the changes that we've seen in the income tax, rebates which the government has offered and more money in the hands of consumers, is next year likely to be a better consumer story for India? And I understand those numbers and GDP growth will be, will be announced with a great degree of lag. But do you think right now, from where we see the scenario playing out in the macroeconomic landscape, is next year likely to be better than this year?
So I think the first half will be still under pressure. The consumption boost which was there from the budget, it's very small if you compare it to the percentage of GDP. It's actually less than 0.5% of the GDP. Right. Moreover, that incentive is not coming in one go. It will come every month. So it's a trickle-down effect. I think a combination of liquidity boost by the RBI, there has been a rate cut, and I think there will be a couple of more rate cuts in the first half of next financial year. Right. All these will play out, but it would take 6 months for these factors to play out because, banks do not transmit the rate cut immediately. It would take probably a quarter or so to actually transmit the rate cuts. Okay. So the consumption impact will be slow to, get into that. And moreover, we are not seeing a very big, pick up in the private capex as well. So my sense is that first half will be slow.
Right. So H2 is where you're betting some hopes on. So let's hope that H2 of the next financial year is better. I want to come to my second question now. Small caps, mid caps, your advice to retail investors: avoid them at all cost, play with them a little gently, or go aggressive on them?
So we have been very cautious on the small cap space for the past 5-6 months. In fact, we have raised a lot of cash, sold a lot of positions or reduced our allocation in a lot of these names. But despite the recent market fluctuations, both the mid and the small cap indices continue to show elevated valuations as compared to historical averages. They have come down from the top, like Nifty small cap was 36x. It's currently, I think, around 26x. Forward earnings for 1 year, but I think it would take time for the full correction to be, to happen. Having said that, there is an opportunity, stock specific, in certain segments like pharma, chemicals, API, CDMO, which can do well over the next 1 year or so. So if anybody has more than 12 months of time horizon, I think there is a case of increasing a little bit of your small cap exposure. You can still be a little conservative by having exposures in large caps. But I think anyone who has more than 12 months time horizon, in the next 3 to 6 months are actually good time to start picking up small caps again. That's what we are doing. We are adding to the position slowly, but we are not in a hurry. It'll probably take 3-4 months to deploy the cash fully back.
Right. So you're saying 12-month horizon, go for small caps, and in any case, look at sector specific and not the entire basket. Now, for those who are using, fintech platforms and making their own SIPs and buying mutual funds directly, good strategy to continue SIPs or switch over to just picking up good quality stocks? And in that context, what should be the allocation of gold in their portfolios as well, Amit?
So I think gold is mainly driven by, the central bank buying and a lot of uncertainty around the tariffs. I see the second part, the tariffs part, getting eased out over the next 3 months. So we sometime, post May, post Akshaya Triti, we can actually see a lot of profit booking happening in gold once these tariffs is out of the way.
All right.
As far as buying from the central bank, that may continue because everybody is trying to diversify a little bit in their reserves by buying gold. So that may happen. That is happening across the central banks. Russia is doing, China is doing, Brazil is doing, India is doing. So I think that will continue. But I will not be a buyer in gold at these levels, even though there is a potential upside of 5-7% from here.
Sure.
I'll probably start taking my chips off in the gold over the next couple of months.
All right. And what about the SIP? What about the SIP? Continue with SIP versus pause SIPs, go for good quality stocks right now. Could be large cap. So what is your view on what investors who are doing a DIY investment on fintech apps, what should they be looking at right now as a strategy?
So again, it's a very investor specific question depending on the financial goals and depending on the current financial circumstances, one should take a call. But as a general answer to that, the passive indices, one should keep SIPs going. But as far as the active SIPs are concerned in the active mutual fund schemes, one should take a call, how they are performing. If somebody was very, overloaded on the small caps and the mid caps or even the thematic, then they need to reevaluate how they are going. Because remember, there have been a lot of inflows in mutual funds in the sectoral themes in the past 1 year or so. And a lot of these themes will not come back very strongly in the next 6 to 12 months at least. So thematics like capital market, thematics like defense, PSUs, they may not come back in a hurry. So I don't see a point of doing SIPs there. Probably you have to stop there, utilize the investment advisor to take a call and shift it to the themes which can do well over the next 12 months.
Got it. And a question which I'm sure you may not want to give a direct answer to. So my question is, how long before September highs can be reclaimed? But if you can't answer that, Amit, how much more are we likely to see this volatility? You said that second half of next year is going to look better than the first half, but where things stand right now, how long is the wait going to be before we can even dream about the September highs that we saw?
So, in October last year, we have already postulated that we don't expect a new high for the 12 months. So the September highs are likely to be breached given the current scenario, of the economic growth, how the quarterly earnings will, pan up over the next 6 months. We don't anticipate a new high till at least September 25, sorry. Post that, it again depends, how the economic situation is there in both in India and globally. So my sense is there will be a time correction for 12 months minimum. And post that one can expect a new high starting with the Nifty and then catching up of mid caps and small caps. So it's a very normal time and price correction of 12 months we are anticipating. But obviously anticipating that we have raised cash in the portfolios and we are slowly deploying that. So there are stock specific opportunities, but nothing may happen on the Nifty level for the next few months.
Got it. Well, it's going to be a 12-month correction cycle. Amit Kumar Gupta, thank you so much for joining us this Friday morning and sharing your views. And moving on, let's look at some global headlines making news this morning. US President Donald Trump establishes strategic Bitcoin reserve using seized assets, names top cryptocurrency sparking market surge and concerns over political favors to the crypto industry. We told you US stocks fall as trade worries shake markets, Nasdaq drops into correction and investors wait for a crucial jobs report. Meanwhile, US job cuts soared 245% in February, the highest it's seen since 2020, as mass federal layoffs under Musk's Department of Government Efficiency drive the surge. The second US judge blocks Trump administration's federal funding freeze, ruling it unlawfully bypassed Congress and targeted DEI and climate programs. Meanwhile, Trump plans new travel ban targeting Afghanistan and Pakistan, likely blocking thousands of refugees and visa holders from entering the United States. European leaders vow to support Ukraine amid Trump's policy shift, unveil plans to boost defense spending and strengthen military capabilities, likely against Russian threat. European Central Bank cuts interest rates to 2.5% as inflation slows and growth weakens, leaving door open for further easing amid looming US-EU trade tensions. Lufthansa and Air France KLM shares surge as airlines beat forecasts, show strong demand and cost-cutting measures for 2025. And German logistics giant DHL announces plans to cut 8,000 jobs in Germany amid a $1 billion cost-saving strategy as annual profit declined 7%, with global trade growth expected to slow in 2025. These stories and more on the other side. You're watching Morning Brief at 9.
Women empowerment is all about letting the woman to remain the woman.
Perhaps you're right, because we've seen what men have been doing all this time.
I think we are not nurturing and leveraging 50% of our strength, which are the women.
For an educated lady, even today, the problem comes when she becomes a mother.
If the world starts getting women-led, I think a lot of things will get corrected.
I 100% agree with you. Humans are different. Our needs of each other are different.
A lot of responsibilities unduly rest on women.
For too long, women have not dreamt for themselves. They've been too afraid.
When it comes to women, a very, very focused approach should be there to create an ecosystem for producing champions.
And that is where we have to set that sort of environment. The message to women was, let the spotlight of your life be on you. We were constantly praised for any little thing that we did well.
After all, we are the product of the history.
We are all dependent on each other. The men like you speak for women, speak with women.
That is the woman that you are. That is the woman you always wanted to be.
It will only grow from strength to strength.
I'm a positive thinking person.
I am defined by what I do.
I'm very pleased to be here.
Thank you, Varun. Thank you for those kind words.
I am, therefore you are. That should be the message from every woman to the men.
Watch Duologue with Varun Das this Women's Day all day long on News9. News9, English news as it should be.
मैं और आप एक जैसे ही तो हैं। एक बार मंजिल दिख जाए,
One shot of a century,
तो उसे पाने के लिए हम अपने कदमों को नहीं रोकते।
that looks out.
पर कभी-कभी मेहनत और मंजिल के बीच रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी और मेहनत लगेगी, पर शुक्र है आपके पास है टाटा कैपिटल, जो मिटाए फासले आपकी मेहनत और मंजिल के बीच। टाटा कैपिटल, मिटाए फासले।
For an India that's chasing its dreams, this is the drive of your dreams. Introducing the all-new Skoda Kailak. Own your dream.
Skoda.
Welcome back. You're watching Morning Brief at 9. US President Donald Trump has signed an executive order to create a strategic Bitcoin reserve. The move comes just a day before he's set to meet with top executives from the crypto industry at the White House. According to his administration's crypto czar billionaire David Sachs, the reserve will be funded with Bitcoin seized in criminal or civil forfeiture cases. Earlier this week, Trump also named 5 digital assets, Bitcoin, Ether, XRP, Solana and Cardano, that he expects to be included in the reserve, sending their market values soaring. But questions remain about how the reserve would work and what benefits it might bring to taxpayers. Layoffs in the United States have surged to levels not seen since the last 2 recessions, and these are driven by mass federal job cuts, cancelled contracts and growing trade war fears. The spike in job losses marks one of the clearest signs yet of the impact President Donald Trump's policies are having on the labor market. Take a look.
U.S. job cuts skyrocketed 245% in February, the highest monthly total since July of 2020, offering the clearest sign yet of the toll taken by the Trump administration's mass government layoffs. According to global outplacement firm Challenger Gray and Christmas, more than 172,000 planned layoffs were announced last month. It was the highest February total since the Great Recession 16 years ago. Challenger said Elon Musk's Department of Government Efficiency, or DOGE, topped the reasons for job cuts. DOGE has purged thousands of federal government workers, including scientists and game rangers. So far this year, the government has laid off about 62,530 workers, a more than 41,000% increase compared to the same period in 2024. Outside of government, there were job cuts in retail, technology, services, and consumer products industries. The federal government layoffs are not expected to show up in February's non-farm payrolls report, which is scheduled for release on Friday.
And staying with news from the US, President Donald Trump is set to introduce a new travel ban that could block people from Afghanistan and Pakistan from entering the United States as early as next week. Now, sources at Reuters say the decision is based on a government review of security and vetting risks. Remember, the move marks a return to strict immigration policies after former President Joe Biden repeated a similar ban in 2021, calling it a strain on national conscience. Take a look.
A new travel ban by President Donald Trump could bar people from Afghanistan and Pakistan from entering the U.S. as soon as next week. That's according to 3 sources familiar with the matter, who said the potential ban was based on a government review of countries' security and vetting risks. The move harkens back to Trump's first term, when he banned travelers from 7 majority Muslim nations, a policy that went through several iterations before it was upheld by the Supreme Court in 2018. Former President Joe Biden repealed the ban in 2021, calling it a, quote, stain on our national conscience. The new ban could affect tens of thousands of Afghans who have been cleared for resettlement in the U.S. as refugees or on special immigrant visas. Many are at risk of Taliban retribution for working with the U.S. during the 20-year war in Afghanistan. Some have been stranded since January 20th, when Trump ordered a 90-day freeze on refugee admissions and foreign aid that funds their flights. The 3 sources, who requested anonymity, said other countries could be on the travel ban list but did not know which ones.
And shifting focus to Europe now, European leaders reaffirmed their commitment to Ukraine, vowing to boost defense spending amid shifting US policies under President Donald Trump. At a summit in Brussels, EU Commission President Ursula von der Leyen met with Ukrainian President Volodymyr Zelensky, outlining plans to strengthen Europe's military capabilities and continue supplying weapons to Kyiv. Zelensky welcomed the show of support, saying it reassured both Ukraine's soldiers and civilians that they are not alone in their fight. More details in this report.
European leaders pledged on Thursday to stand by Ukraine and spoke of a new era of military preparedness spurred by Russia's invasion and Donald Trump's abandonment of what had once been a U.S. ally in Kyiv.
We want a peace through strength. And this is the reason why I present today to the leaders the Rearm Europe plan.
EU Commission President Ursula von der Leyen met with Ukrainian President Volodymyr Zelensky at the summit in Brussels and described her vision of rearming Europe and supplying Ukraine with weapons.
It gives the member states possibility to invest in the Ukrainian defense industry or to procure military capabilities that go right away to Ukraine.
We made a strong signal to Ukrainian people, to Ukrainian warriors, to civilians, to all our families, and it's great that we are not alone. We feel it and we know it. Thank you so much for everything.
According to NATO, Washington provided more than 40% of military aid sent to Ukraine last year.
If you didn't have our military equipment, this war would have been over in 2 weeks.
In 3 days, I heard it from Putin, in 3 days.
But President Donald Trump abruptly ended that arms supply following an Oval Office shouting match with Zelensky last week that led to a reversal in American support and stunned American allies. In the days since, that shock has hardened into new resolve, driven by fears that Russia, emboldened by its war in Ukraine, may attack an EU country next, and that Europe cannot rely on the US to come to its aid. In a televised address on the eve of the summit, French President Emmanuel Macron said, quote, "I want to believe that the United States will stand by us, but we have to be ready if that is not the case." And in a sign of the gravity of the moment, Macron said that France was open to discussing extending the protection offered by its nuclear arsenal to its European partners. Moscow said Macron's speech contained notes of what it called, quote, "nuclear blackmail." The French proposal was met with mixed reaction from other nations.
I think it's a very interesting idea, and we see to this proposal with high expectations because, nuclear umbrella would serve as really very serious deterrence towards Russia.
That was Lithuania's President Gitanas Nausėda.
Wir sind in der NATO miteinander verbündet. Dazu gibt es.
German Chancellor Olaf Scholz stressed the need to keep the US involved.
And the European Central Bank has cut interest rates as expected, lowering the deposit rate to 2.5%. The move comes as inflation slows and economic growth weakens across the region. But with Europe facing a looming trade war with the US and ramping up military spending, the continent is undergoing its biggest economic policy shift in decades. Take a look.
The European Central Bank cut interest rates as expected on Thursday. It lowered the deposit rate to 2.5% as inflation slowed and growth faltered. The central bank said rates were still restricting growth, even if less so than in the past. Such wording left open the possibility for more easing ahead. ECB President Christine Lagarde.
Our monetary policy is becoming meaningfully less restrictive, as our interest rate cuts are making new borrowing less expensive for firms and households, and loan growth is picking up. The disinflation process is well on track.
The ECB's position suggests another rate cut in April is not a certainty. It also lowered its economic growth forecast for the fourth straight time on Thursday. It put expansion this year at just 0.9%, only slightly above last year's pace. Inflation is also projected to be 2.3% this year, slightly above the number seen 3 months ago.
The downward revisions for 25 and 26 reflect lower exports and ongoing weakness in investment, in part originating from high trade policy uncertainty, as well as broader policy uncertainty.
The update comes while the European Union braces for a potential trade war with the US. Firms have already held back investment as they wait to see what happens.
Well, that's all we have for you on this edition of Morning Brief at 9. Thank you very much for watching, but news will continue right here on News 9, so stay tuned. Thanks for watching.
I feel women are the strongest species.
I 100% agree with you. Humans are different. Our needs of each other are different.
If the world starts getting women led, I think a lot of things will get corrected.
The men like you see this sort of inequity and injustice that's being done towards women. Speak for women. Speak with women.
You also have often been vocal about you having an identity. You have not changed your name.
Women should have a choice to have their own identity within a marriage, perhaps redefine themselves.
And it is men that bring about all those social structures, all those narratives.
We have to join hands and change the narrative.
You're not just a mother, not just a daughter, not just a wife. You are the woman who's always happy, always at the top of things.
Watch Duologue with Barun Das this Women's Day on the 8th of March, featuring Kiran Rao, only on News9. News9, English news as it should be.
मैं और आप कोई फर्क नहीं है हमें।
6 needed of the last ball.
जब ताक लेते हैं अपनी मंजिल को तो उसे पाने के लिए कमर तोड़ मेहनत करते हैं, पर कभी कभी मेहनत और मंजिल के बीच
हाउस इज नॉट इन योर बजट सर, सॉरी,
रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी